Welcome to the January 2021 edition of our Fortune Maker series. We'd also like to welcome in our new subscribers, as well as the rest of our clients and other stakeholders and our other left brain entities. We started this series back in 2020. We define Fortune Maker stocks as stocks with substantial appreciation potential. We define that as having the potential to turn 100,000 into $1 million. So 10 for 1 being the upside potential of these Fortune Maker series. And today we're highlighting a subsector of cybersecurity, but continue to look for the Fortune Maker series in the future. We'll be highlighting different sectors, but it'll be back. We will be talking about securities that we think have the opportunity for substantial upside appreciation, but you should know that there is no guarantee. Remember, we've evaluated these stocks on a lot of angles, and we are giving you our opinion and our analysis. But remember, the securities are not FDIC secured. They are subject to loss, and we suggest that you work with a qualified financial professional before you take positions in any securities that we mentioned today. To give you a little bit of background on who we are and what we do have a slide here that gives you, that sort of points you to our website, leftbrainir.com. We've highlighted the About Us section, where we sort of talk about our philosophy and our process for how we choose these individual securities. A lot of questions come to us as we send out our Left Brain Weekly. We speak on our podcast, and we also talk about individual securities. A lot of people are curious on our process and how we look at the world. And we lay that all out for you in quite a bit of detail on our webpage. So feel free to view that at your leisure. To give you a bigger idea of Left Brain as an enterprise, Left Brain Investment Research is the investment house and the brains behind the sort of selection of the investments that we're choosing. And it is the engine behind our selection at our wealth management business, our registered investment advisory firm, that's Left Brain Wealth Management. And as of the end of the year, 2020, we ended the year at about 230 million in assets under management there. And then we have a much faster growing capital management, our asset management division, where we manage the Left Brain Capital Appreciation Master Fund, which is a Cayman domiciled offshore vehicle, which 5 years ago started at $1 million. Is now finished its 60th month. It just crossed the $35 million threshold. So that's a look at who we are as an enterprise. And again, a lot of people ask us from an investment perspective how we look at the world. Remember, there's a few things that sort of go into the securities we select. One, we do start with a hand-curated list of about 1,000 names that we look at. We've selected these sort of one at a time on metrics we think at some time and some price may be of interest to us. We do weekly uploads for these securities, and we evaluate and rank them weekly based off a few things. One, we do like businesses that are fundamentally healthy. The positions that generally the businesses that you see us take positions in, you're going to see very little debt, very healthy growth rates, and a lot of times forward profitability. So fundamentally, the business case for these businesses are really strong. But what we do, we go a second step and we think about sort of there's a business momentum, and then there's also sort of a stock price action. Sometimes they move in tandem. Sometimes they're detached. So we also look at sort of some technical indicators of what the share price and the market action is on those shares, and we call those technical indicators. And then the final thing that we look at is what we call quantitative factors, and these are proprietary inputs we look at. Every week, we look at this list of 1,000 through the view of those three sort of combined buckets, and then we come up with a score. From that point, the investment team, we take a look, I do, as the chief investment officer, to see what may be interesting for us to take a deeper dive on. But it's a lot of securities, a lot of information, a lot of data. Things move quickly. It would be impossible to track manually. So we have built a securities evaluation application to help us evaluate securities based on multiple angles and evaluate them in real time. And so that's a look at Jarvis, and it powers the work we do and where we start our research. And at this point, I'm going to turn it over to Freddie to give us an update on other things we're doing in the podcast world.
Thank you, Nolan, and Happy New Year to everybody. As you know, you've been receiving the constant contact messages, and every week Emery sends those out to you. And that covers the podcast that Nolan, myself, and the other analyst here at Left Brain, we pick an individual security and a topic and discuss it on the podcast. And we send that out to everybody, and it's usually about a 7 to 8 minute excerpt. So we hope most people enjoy listening to those. And we're going to keep doing those throughout the year. And our hope is to cover about 50 securities throughout the year in different topics. And then for this presentation, we'll be covering cybersecurity stocks. It's one of our areas of focus for this year. And we're going to give up a close-up of CrowdStrike and cover up the CEO of CrowdStrike as well. And then we're going to have an analyst head-to-head later on after that. And then we'll finish off the presentation where Mark Heinz will be giving everyone an access code to our January chosen list. So for those subscribers or non-subscribers that are interested in taking a look at our chosen list, we'll have an access code accessibility available for you guys. So we hope everyone enjoys today's presentation, and I'll kick it back to Nolan.
Data is really important. And when you talk about cybersecurity, we can just drop the word cyber and just think about security and think about everything of value you own. So think about your values in your home. You have a lock on the door. Think about your auto. You have a key fob and you lock it. So everything of value, you lock it. Those are physical assets. And in the new world that we're in now, the 21st century, all the real valuable stuff, it's all digital. Probably all your most valuable stuff is in your handheld smartphone, right? And if you think about your passwords and your email combinations to all your financial resources, whether it's your banking, credit card, your employment, HR data, or what have you, it's pretty silly that we wouldn't have top-notch security on that data. In a lot of cases, is not only do we not have top-notch security, we don't have any security. Like the bad guys don't have to show up with any bad intent. They just walk through the door because there's nobody there protecting anything. It's unbelievable. So cybersecurity, though you've heard a lot about it, I think you're going to hear a lot more, and rightfully so. And what we've heard in the headlines has been what you've heard from the governments and big institutions and data breaches, whether it's the retail outlets or whomever. And these are the big institutions that have millions of dollars and staffs of people whose their full-time job to do nothing but keep the bad guys out. And they keep getting in. The problem that they have is their technology stack. A lot of cases, it's last generation. And when you've built an entire organization of tens of thousands of people at multiple locations on a technology stack that's last generation, it's really tough to keep the bad guys out if everybody was working in office. But now that people are working more remotely, it makes it a lot more difficult. So I think you're going to hear a lot more about more data breaches. I think they're going to occur with more frequency. And I think the target of what they're after, I think they're going to continue to grow more emboldened and more aggressive. And so I think everybody needs to be more vigilant. But I think corporations, for them, they don't really have a choice. It's not a discretionary item. It's something they must do to protect themselves, and it's good for business. So cybersecurity is a focus, and we think there's great opportunity there. We're going to turn it over to Brian now to talk about some things that have been happening lately.
Thanks, Nolan. For those of you who aren't familiar with me, I'm Brian Dress. I'm the Director of Research here at Left Brain. I just wanted to talk to you a little bit about this SolarWinds breach, which has been in the news. Like Nolan said, cybersecurity is of utmost importance to businesses and governments of all sizes, organizations of all sizes. But this SolarWinds breach has really brought it all into vast relief here. This was announced in December of last year, and some have called this the Pearl Harbor of IT. Over 18,000 networks, both government and private, have been hacked through the SolarWinds breach. And I was just reading up a little bit more about SolarWinds the last few days, and it turns out that one of the servers in 2019 turned out had a password of SolarWinds 123, if you can believe that. Hopefully they've changed it by now, but it's just not even clear the depths and breadth of this attack. We're talking about the US Treasury, Department of Homeland Security, Commerce, NATO, UK government, and even AstraZeneca. So we're talking about private and public networks that have been breached by just one single breach. And, you know, like as it says here, reliance on a single point of failure. These bad guys are sophisticated, and they can just get in from one weakness, and they can spread their web out into many, many different networks. And that's what we saw with SolarWinds. And what that really tells us as investors is really how important it is to get onto that next gen technology for cybersecurity. And a few of the companies that we're going to talk about as we go forward here in today's presentation are more next generation type of operators in the cybersecurity business, moving beyond sort of the last generation technology of a company like SolarWinds. So, you don't necessarily need to know the ins and outs of SolarWinds, but it does really show us how crucially important it is to be secure with your computer networks, and that's something that we're going to talk about as we go forward here today. I'm going to go ahead and push it back to Freddie for our first poll question.
Okay, so just to get an idea of how deep of a threat cybersecurity is and how much of an issue it is, we thought we'd share that with the poll question. We wanted to get an idea from from our subscribers and our clients is, has your personal online data ever been breached? So yes, no, or not sure. And again, this is a huge issue, not only for companies, but for individuals as well. So it looks like about 32% of you had said yes. 52%, thankfully, have not had the experience. And then about 16% of you said you're not sure. Again, those are, even though if it's not the majority, that's still a huge percentage of just from our small polling audience. So again, this is an issue amongst individuals. Imagine corporations dealing with this, where they have basically thousands of people's information. And I'll turn it back over to Nolan.
So the first name that we're going to look at is interesting. The name of the business is pronounced Okta. And for those of you who are curious, Okta is a type of cloud. And it should be no surprise that Okta is a cloud-based business. And for those of you who aren't sure what that term cloud means, what we mean is, I think, if you think about Y2K as being really the start of the technology revolution, if you will, when you think about servers and desktops, at that time, everything was built in a server location for really office workers to work in office on location. So basically your security stack was, let me secure the perimeter to keep the bad guys out. Now there's some problems with that. One is, once you breach the perimeter, You've infiltrated the whole institution. That's one. But the bigger issue is when your workforce is sort of distributed. That becomes a bigger issue. Anyway, when things are in the office or on premises, it's just on premises. But when you have your technology in a remote center or a data center that's not in your office, it could be in the next town, it could be in the next state, and then you use the internet to connect to it, that's considered using the cloud or the internet to access where you are from a data standpoint. So that's sort of a background on Okta. The other thing I'm going to point out here, go back to the to slide 12 here for a second. I want to point out something else. Most of you would pay attention to stock price. For us, it's really not important. But I do want to point out the market cap. When we say market cap, basically we're saying, how big is this business? Generally, we say companies are small if that market cap number is $2 billion or less. When it starts getting close to about 5 billion, we say that's about a mid-size or middle-size company. And when you get north of 10 billion, we'd say you're a large company. And when you get to be 100 billion, we say you're kind of a mega cap company. So that's how to look at where Okta is. It's on the early side of being big. Let's go back to slide 12. There's one more thing I want to point out here, which is, I think, really important for people to understand who are following Left Brain, or at least trying to get to understand how we look at the world, and that's valuation. People talk about to us about these great businesses and then how we look at price or what we're willing to pay. And we think the most important metric to look at when we talk about these names, either here or in the weekly that Mark sends out, or the chosen list that we keep, or our long-term growth model that Brian updates once a month. Take a look at this price to sales. And particularly, if you're looking at it in any database, Yahoo Finance, Bloomberg, on any website, you're going to find price to sales. Generally, it's going to be backward looking or trailing. What our analysts do is we actually use a forward number. So we give the revenue number next year, and that's a more accurate look. But forward price to sales is a more true look at valuation. And the reason I say that is a lot of you have been trained, or most of the investment world have been trained to look at businesses through a price to earnings ratio. That valuation technique is not appropriate for the businesses that we cover, number one. And number two, it's very misleading because it's a backward looking number. So I just wanted to point that out right before we get started. So let's go ahead and move on, Brian. So here we're just taking a look. The thing to pay attention to here is obviously the share price has had a lot of appreciation. But this company had an IPO. It wasn't that long ago. It was about 4 years ago that the company became public. And you can see for every $1 invested at the offering, $1 has turned into 9 in about 4 years. And that's what happens with these businesses. When you get a business in an industry that's a growing industry, that's attractive, that's a first mover with a really good product or service, you can get dramatic price appreciation when it goes right. So that's to take a look at Okta from a past standpoint. The big thing to know about Okta, let's go to slide 15, Brian. The business itself is single sign-on. And what that means is, again, Okta operates in the enterprise. And what that means is at work. So if you operate and you work at a big company, or even a smaller company like ours, you come in the office in the morning, you have a main sign in to your company computer, And then you have multiple sign-ins after that. You may have your individual HR and then multiple applications and then also websites you may sign into. Take a look at slide 17, Brian, if you can fast forward. Here's a number of vendors that Okta integrates with. So in essence, if your enterprise or your employer has signed on to Okta to use their software platform, you'll have one sign on in the morning. And these are just sort of some of the vendors you could be using that you wouldn't then have additional sign-ons for. So not only does it save you time as an employee, as an employer, it's a much more secure way to have your employees sign in. And so single sign-in from an identity standpoint, who has access to what, and to make sure user IDs and passwords are up to date and synced, becomes a huge issue and point of control, particularly when you're in a big enterprise dealing with thousands and thousands of users. And so Okta has a simple user interface. It's a product that it's a leader in the category. It's easy to use. It's sticky. It has high recurring revenues. And you can take a look at the large addressable market of the business. What we really like is, as you could see from our earlier look, this business itself is a $30 billion business. And it's really unusual to see revenues growing at 47% a year, particularly a business that's profitable. It's very unusual, particularly when they have so many catalysts. So we think this is a really, really attractive business in an attractive industry, and the timing is right. The last slide, or last thing we're going to talk about in regards to Okta is who runs Okta. And Okta was started and founded by Todd McKinnon. In our opinion, well, in everybody's opinion, he is the leader in this sort of single sign-on identity cloud business, and he started it. He was the head engineer at Salesforce.com, who a lot of you are familiar with, and he left there in 2009 to start Okta, and he has remained in charge since then. And as most of you know, if you read our philosophy page or any of our work, we really prefer investing with founder CEOs, particularly when they're visionary, accomplished. They show patterns of success, as Todd does. And we're very comfortable with him at the helm. So certainly that's another reason to like Okta in the business there. As you know, with all of these securities that we talk about, they're not FDIC guaranteed. There is a risk of loss. So remember, like Okta, like any of these other names, there are risks. So make sure you pay attention to that. Freddie will give us our next poll question. Freddie?
All right. And again, sticking with cybersecurity, one of the reasons why a lot of people have issues with cybersecurity is because of how they treat their personal information. So this next question has to do with that. So how do you manage your online passwords currently? So first response would be write them down in a notebook, save them on your electronic devices so they autofill, use the same password for every site. That's very common. Use a password manager app or software. We got a mixture of different results. So 35% of you said you write them down in a notebook. 17% of them say you save them on electronic devices to autofill. And 9% of you use the same password every site. And 39% use a password manager app or software. So that's pretty positive to hear. But we appreciate everyone's feedback on that. And again, this just gives you an idea of what people are looking at and how easy it is that people can hack into people's accounts, because the first thing they do is they get passwords. And with that, I'm going to turn it now to Brian.
So as Nolan said, we're not shy about our view that we do like founder-led businesses, and has, like he said, Todd McKinnon is a great example at Okta. And part of our investment process is to get a full profile of CEOs of a business that we analyze. And we wanted to show you a little bit of our process and how that works in that regard. And so the way I'm going to do that is I'm going to share with you a video that I made recently about the CEO of the next business, which we'll talk about, which is CrowdStrike, and his name is George Kurtz. I'm going to go ahead and play that for you now. Hello, investors, and welcome to Fresh Look from Left Brain Investment Research. Here we introduce a new series, CEO Profiles. Today we profile George Kurtz of CrowdStrike, ticker CRWD. I'm Brian Dress, Director of Research here at Left Brain Investment Research. Through the left brain lens, we often look at securities from a number of different angles. Our experience suggests that stellar and innovative management are one of the hallmarks of outperformance. Thus, we sometimes produce reports dedicated solely to the study of a company's top manager, called CEO Profiles. I recently completed my report on CrowdStrike CEO George Kurtz. After we completed our research on Kurtz, we came away even more convicted on the company as an investment than we were before. So convicted, in fact, that I figured it worthwhile for me to shave my quarantine beard to record this video to share my enthusiasm. George Kurtz is one of the computer science boy wizard programmer types that run many of the most successful companies in Silicon Valley. Back in the early 80s, Kurtz got started in the 4th grade, programming original video games on his Commodore system. He kept the interest alive in high school, where he spent time programming some of the first bulletin boards of the internet era. Kurtz took a degree in accounting from Seton Hall and joined venerable Price Waterhouse in 1993 as a CPA. His programming acumen was quickly put to use as he became one of the first employees of the company's cybersecurity group. In 1999, Kurtz co-wrote one of the most influential works on cybersecurity for network administrators. Hacking Exposed has sold more than 600,000 copies in over 30 languages. On the back of that bestseller, Kurtz started cybersecurity firm Foundstone, which he sold to industry leader McAfee in 2004 for $86 million. Kurtz's time at McAfee as chief technology officer clued him into the limitations of the old way of securing networks. In 2011, Kurtz left McAfee to set out on his own, co-founding CrowdStrike as the first platform for security built exclusively in the cloud computing space. His stated goal was for CrowdStrike to become the Salesforce.com of network security. The legacy cybersecurity vendors like Norton and McAfee use an anti-malware model. With hundreds of thousands of new malware threats deployed each day, the model is becoming obsolete. With so much computing taking place in the cloud, Kurtz and CrowdStrike's major innovation was to shift the focus of security to the endpoint, using database technology that observes over 1 trillion events per week and artificial intelligence to make sense of that data. CrowdStrike has certainly succeeded in its execution, as evidenced by the more than 100% annual growth rate in revenues over the past 4 years. But it's CrowdStrike and Kurtz's vision that sets the company apart from the others in the business. Kurtz's observation is that legacy providers are far too accepting of breaches in a business where the costs of network failure are so great. Says Kurtz, we are on a mission to stop breaches. He tells investors that the security industry is outgunned, losing ground every day. Customers everywhere are frustrated with the old on-premise solutions that cannot scale quickly enough to meet the level of threat from both state and non-state actors. CrowdStrike's advantage was Kurtz's choice to build the platform from scratch at the time of founding. From the beginning, Kurtz has made the platform open source, which means third parties can code improvements to the platform. CrowdStrike makes these enhancements available to all customers in real time. Another advantage here is that a threat neutralized for one customer gives insights that protect all others in the CrowdStrike ecosystem, in a process Kurtz calls community immunity. Not only did this decision give CrowdStrike's platform the edge over competitors, but it set the company up well financially. The subscription-only model ensures very high profitability for the company, with gross margins accelerating rapidly to 72%, according to the company's most recent filings. Kurtz's innovative strategy has been an absolute hit in the marketplace. The efficiency, reliability, interoperability, and speed of the CrowdStrike platform has given the business customer retention rates higher than almost any other computing company in the industry. In summary, George Kurtz's background and prior history of success as a founder CEO at Foundstone were excellent preparation for his current position at CrowdStrike. Pioneering vision he brought to CrowdStrike has taken the company straight to the top of the industry in less than a decade. And the proof is in the dizzying revenue growth and expanding margins. Last quarter, CrowdStrike reported trailing 12-month positive free cash flow for the first time. So Kurtz has this company on the right track for continued leadership, in our view. We hope this video gave you insight into the leadership of one of the hottest companies around in CrowdStrike, as well as what we look for in a successful CEO. For more CEO profiles and other stock reports, visit us at www.leftbrainir.com. You'll get the latest from LBIR and have the chance to be a part of our growing community of left-brainers who experience the informed decisions and independent thought that powers our search for profitable investment opportunities. This is Brian Dress of Left Brain Investment Research for Fresh Look. Thank you and see you again next time. just to try to give you a sense, that's what we're looking for CEOs. We're looking for serial entrepreneurs, visionaries, and CEOs that have alignment of interests with investors. And so that's why we do spend a lot of time on CEO profiles. And those of you who are subscribers to our investment research product will have access to any CEO profile video or any other videos that our analysts may make in the course of our analysis. And then we want to talk a little bit more about CrowdStrike, and I'm going to bring in our senior investment analyst, Janice Queck, to speak with you also about CrowdStrike and also another business which we call Proofpoint. In our analyst head-to-head segment, we want to help you give you a sense of the way we analyze businesses in the Left Brain investment team in a collaborative way. And Janice, as I said, is our senior investment analyst, and she's done plenty of work on the cybersecurity space. The first stock Janice and I are going to discuss is going to be CrowdStrike, and that's ticker CRWD. This was one of the best performing stocks of 2020, and with good reason. And what we want to do here is we want to flesh out whether the high price of the stock is justified by the fundamentals of this business, as well as the market opportunity. And you'll hear a lot of talk, on a valuation basis. We're talking about a company with 40 times price to sales ratio. And is that overvalued? And that's kind of the type of the thing that we want to talk about here and discuss, what goes into whether we think a company's valuation is justified by the fundamentals. And as you can see here with this chart, investor sentiment for CrowdStrike has been extremely positive over the past year, especially since the pandemic hit. And, we hope to answer a few questions that come to our mind as investors when we think about a company like CrowdStrike, especially with such a high valuation. So I'm going to ask Janice to clue us in on a few of the aspects that she likes about CrowdStrike. And I'll start with a couple of questions, which is, what kind of security challenges does CrowdStrike intend to address, and how effective is CrowdStrike at meeting those challenges relative to competitors? And the company has what's called cloud native architecture. Janice, could you tell us a little bit more about why that cloud native architecture is an advantage for CrowdStrike?
Sure, Brian. So everyone kind of watched the video earlier on George Kurtz, and in the video itself, he mentioned a little bit about what CrowdStrike does and how it defends organizations and protects them. He mentioned the word endpoint. So I'll talk a little bit about endpoint first before we go into answering Brian's question. So CrowdStrike, it offers a cloud native platform that protects organization workloads in different kinds of environments. When you think about today, companies operate both on premise, the traditional way, as well as in the cloud, or a combination, which we call the hybrid environment. And an endpoint is a device connected to a network, such as a laptop, smartphone, or server. And what CrowdStrike does is that it installs something called a lightweight monitoring agent at the endpoint on the laptop or any kind of device that communicates with the CrowdStrike platform in real time. And it checks for threats on your laptop, on your smartphone, on your servers for any kind of suspicious activity. And then the software can ensure that it responds to attacks quickly. So when you talk about what kind of security challenges companies face today, the threat environment has become a lot more complex. Attacks are very much more sophisticated. They're harder to detect and identify, and certainly a lot more deceptive. And they have also evolved very quickly. So as organizations move to the digital age, or more employees are doing remote work these days, there is an increase in the number of devices in a network as they become more distributed. Companies are also working in the cloud. So these choices increase an organization's exposure to attacks. And in order to keep the modern enterprise safe, there is a need for cyber protection solutions that need to be agile, they need to be responsive, and they need to be up to date with new kinds of threats and tackle the workloads in the modern enterprise. So it may not sound like a lot of features, but this is actually really hard to do, especially when it comes to being able to identify and respond to threats in a very timely manner. So threat intelligence is then a key factor for threat identification. And CrowdStrike has these advanced techniques to source for threat data. It has something called a threat graph, which is a central repository of threat information. It's one of the differentiating factors for CrowdStrike, a company like CrowdStrike. And that makes it so effective because it leverages artificial intelligence and machine learning to look for patterns of attacks from these endpoints that it has the agent on, the monitoring agent on. And over time, this repository gets smarter and data rich from the cumulative history of all the endpoints it monitors. And this approach has been more effective than your traditional signature-based detection that other legacy providers are offering. And part of this because CrowdStrike, it's cloud native, which means that the infrastructure, the architecture of the software is built in the cloud. It originates from the cloud. And this has made CrowdStrike monitor and collect data from a large network of endpoints more effectively. It's only possible with the cloud. And this gives the software the competitive edge.
What I really liked about CrowdStrike when I read your report and did a little bit more work on it was, they leverage what they learned from one customer to help keep all the other customers safe as well. And like you said, using machine learning and artificial intelligence really creates a very safe environment in which all of its customers to work. And it seems like a differentiating characteristic. You don't see that from a lot of these other companies where they're, taking advantage of a large and growing network to increase the security level of their product. And so I think you made a great point as you discussed it. And so we think CrowdStrike has a terrific product, but I think also compelling is sort of the financial data here. And like we always at Left Brain, we always look through securities through what we call the Left Brain lens. And there's always a few characteristics that we're looking for. And one is strong growth in total addressable market. And so what I'd like you to flesh out a little bit more is, how do you view CrowdStrike's market opportunity? And then also, can you speak to some of the financial data that is compelling in terms of the story here?
Yeah, so the opportunity for cybersecurity industry is really very vast. Nolan mentioned it with the total addressable market for Okta itself was $30 billion. For CrowdStrike, its total addressable market is about $32.4 billion. And that's represented by its portfolio solution currently as 16 different kinds of modules or different kinds of solutions. This is projected to grow as the company's portfolio expands, it adds more solutions. And we project that the market's going to reach $38 billion in 2 years. So the opportunity and under-penetration has been a contributing factor for CrowdStrike in its rapid growth, and we can see that from the financials. The company has been reporting strong growth rates exceeding 100% in the last 2 years. That's really impressive. It has accumulated about $907 million in annual recurring revenue from software subscription. And what that means is that every year, customers are paying at least $907 million for their software subscriptions to protect their organizations. And it has more than 8,400 customers today. And when you think about how subscription revenue is growing, it's in the high 80+% for CrowdStrike. And we also like profitable companies. And from a profitability standpoint, CrowdStrike is not yet quite profitable, but it's very close. And at the end of this fiscal year, it's very likely to turn. So that's in a few months, it will become profitable. And the company is generating positive free cash flow, which is great for lowering the financial risk of the company.
Yeah, that's great, Janice. I think it just puts it into context. We were talking about the valuation of the business at 40 times sales. When we see a growth rate of 100% or nearing 100%, like we see in CrowdStrike, it actually justifies that sort of multiple. And so we don't necessarily consider a valuation like that overvalued, which kind of differentiates us from a lot of other asset managers. And we want to just quickly discuss another name that Janice covers, and that's Proofpoint, which carries a little bit more modest valuation than CrowdStrike. And Proofpoint has created a nice return for investors since it IPO'd in 2012, but we can see that it's sort of slowed down over the last couple of years. And Janice, briefly, can you tell us what problem is the company trying to solve and how effective has it been in trying to solve that?
Yeah, so Proofpoint has a slightly different approach to protecting the organization. CrowdStrike, its focus is on endpoint security. For Proofpoint, it's email security. There was a report, industry report by Verizon on data breaches, and the report mentioned that about 32% of breaches covered in the report itself involved some kind of phishing through email, and 94% of malware incidents was delivered via email. So Proofpoint is a market leader for email security, and that's its main focus to protect users through email. But the company doesn't just have one layer of email security. It also has other forms of protection, such as email fraud, credential phishing, and ensuring that vulnerable accounts and very attacked accounts do not get compromised. So it has multiple solutions, just like CrowdStrike in its portfolio. It does not just focus on email security.
Talk a little bit more about the market opportunity we see for Proofpoint.
The broad-based opportunity for the cybersecurity industry in general, I mentioned earlier, it's large. For Proofpoint itself, the market opportunity is about 12 billion today. It's projected to grow to about 19 billion because the company continuously adds solution. Innovation is at the forefront of, it's a huge emphasis for Proofpoint. And as it adds new solutions, based on what the market needs and how the threat environment evolves, the company adds more offerings to protect the companies and its existing clients. So it's projected to grow to about 19 billion in a couple of years.
Okay, great. And Proofpoint has another CEO, founder-led CEO, named Gary Steele, who we also admire quite a bit, just like we do Kurt's. And again, of course, risks are involved here. And then we'll just kind of summing up this this segment. A couple of questions, Janice. Are there similarities between these two companies that make them good fits for the current environment? And then another question that comes up for me, as we know, the pandemic's been a huge catalyst for these businesses. Do you expect the revenue growth numbers that we see being sustainable going forward after the pandemic's in the rearview mirror?
To answer for your first question, Brian, about similarities of both companies, part of what makes both Proofpoint and CrowdStrike successful is that they're built for the modern enterprise. A lot of the legacy providers are built to protect legacy systems, traditional systems on-premise. So they're not built for the cloud. And as companies move to the cloud, they face a different set of security challenges. And Proofpoint and CrowdStrike are cloud-native software to protect workloads, both in the cloud and in traditional environments. Another point is that I mentioned earlier, with CrowdStrike, it has about 16 modules, and with Proofpoint, it has a large portfolio of solutions too. So these companies are not protecting the organization in just one way. They're protecting in different ways, and then they have more than one solution. And so these are, you see the way Proofpoint and CrowdStrike expand over time and grow over time. You see these similarities as they try to provide as comprehensive a coverage and protection as possible for their clients.
We're seeing a lot of revenue growth in these businesses. Do you think that's sustainable going forward after a pandemic's over?
The pandemic has been a huge catalyst for CrowdStrike and Proofpoint in their growth, because a lot of companies were moving to a more distributed model. There was a lot of remote work involved. So there was more endpoints. People needed more protection as they work out of the office. So it certainly was a catalyst, but when we studied the earnings calls recently, we found that actually, while it was a catalyst, the companies were continuing to report very strong performance even after the initial pandemic buying flurry kind of subsided. So I think that's a really good indication of how the demand of cybersecurity solutions are becoming more important for chief security officers of these organizations. They're allocating more budget. There's a lot more emphasis on security solutions, and they know that it's necessary. They know that the repercussions of not having a well-protected enterprise are devastating, because it could damage the reputation and trust of its clientele. So you see growth rates, especially for CrowdStrike, continue to accelerate. People are still buying more, and they're adopting more solutions, more modules. So I think that's a very good indicator of longer term demand for both CrowdStrike and Proofpoint.
The other thing I wanted to note, just in regard to cybersecurity, one of the things I will point out, what gives us some confidence that we think this growth rate's probably going to accelerate. Before COVID, these corporations have a lot of priorities and a lot of financial pressures. Yes, they're big companies, and yes, they have a lot of money, but they also have a lot of financial pressures and a lot of spending requirements as well. And just like everybody else, they prioritize. Before, things are going fairly well. You have some things you can put on the priority 2 or 3 list. Maybe this cybersecurity, I'm sure for every corporation, it was not priority 1. So maybe you punted when they came into your office and proposed you upgrade your technology or your cybersecurity or your movement to the cloud. But COVID just made it so it is no longer an opportunity to move it down the list. It has to go up the list. And because of that, a lot of these CEOs that weren't looking to do this as a 2021 project switched to cloud-based, to modernize, to digitize. Now they're forced to do it. So I think you're right. I think it was already going in this direction, the path of spending, product use, and that sort of thing. But I think now it's a must-have.
I'm going to shift gears here now and introduce the managing director of Left Brain Investment Research, which is Mark Hines. So he can tell you what's new on the site and how subscribers can get the best value for their subscription. So Mark, please go ahead and tell us some more about that.
All right, thank you, Brian. As Brian said, for those of you who don't know me, my name's Mark Hines. I've been working with the Left Brain team for about 5 years now, originally on the Left Brain Capital Appreciation Fund, and then more recently on Left Brain Investment Research. What you're looking at on this page right here is the homepage for Left Brain Investment Research. And the point I really want to make to everybody is, these cybersecurity stocks we're discussing today are really just a small subset of the amount of research and content we create for the business Left Brain Investment Research. If you do go to the homepage of the site, it's www.leftbrainir.com. You can see a sample report. It's kind of cut off on this slide, but if you do go to the homepage, you can click on that report. It's actually a CrowdStrike report. It'll pull up. You can see some of the work we do. Then every week in this kind of middle column here, we'll update all the new reports for this week. If you scroll down, you'll see a library of reports and logos for all the names we cover. And then over on the right there is a video. It's our weekly podcast called Left Brain Thinking. We just put a new one out there, I believe, yesterday. So really just wanted to remind you guys to check out the site and that it's really just a small subset that we're covering today of all the research that we have. This next screen you're looking at, just real briefly, the subscription options. We offer 2 options, a basic subscription and then a premium subscription. The basic subscription gets you access to almost all of our content. You can see the price over there on the right. And then the premium subscription at a higher price point gives you all of our research reports and videos and podcasts, as well as it gives you access to our model portfolios. There's 2 model portfolios out there that we'll update monthly, the long-term growth model, and then we also have a high yield bond portfolio. And then you also get access to something we call 7-pack presentations. These are more visual reports describing some of our top investment ideas. So I'm going to turn it back over to Nolan now, and I believe Nolan is going to discuss another cybersecurity stock.
That brings us to Fortinet. So let's start here. A couple of things I'll point out. One, a little bit smaller than Okta. Okta, we looked at, the market cap was 32 billion. Here's a little bit smaller, 22 billion. So again, it's still a larger cap, but on the smaller side of larger cap. Remember, large companies kind of start at 10 billion and go to 100 billion. The other thing is the valuation here. Price to sales ratio at 7.8. That is not very expensive. We wouldn't call it cheap, but you certainly wouldn't call it expensive. So that we'll point out. Let's move ahead here. The other thing to note here with Fortinet. And just so you guys know, Fortinet, what they do a few things, but they primarily started life in hardware as a firewall vendor. And if you think about what firewalls do, they are the first line of defense to keep the bad guys out. So think about it being like a deadbolt lock on the front door. It's the first line of defense to keep the bad guys out. But it is a hardware product. The margins are lower, their product cycles, so sometimes the revenues are a little bit lumpy. But a couple things to point out. If you'd bought these shares when they came out on the offering 11 years ago, you did very well. You'd have did 15 for one on your money, which you would have been a very handsome return. And like Brian mentioned earlier with Proofpoint, you'll notice over the last 12 months, a little bit more pedestrian return. Not that much over the last 12 months, considering how a lot of these technology and cybersecurity stocks have done. So that sort of something to pay attention to. The other thing to pay attention to is the founders. Again, we have a founder-led organization led by brothers, Ken and Michael Z. And again, they began on the software business and then moved into hardware. So it's generally a different life cycle of a lot of these other businesses that we've seen. We've seen a lot of these businesses start life in the hardware business, as most computer companies did in the early 2000s, and then transition to software. In this case, they've gone the opposite direction, which makes this revenue mix slide very interesting. Unlike earlier, where Janice was talking about CrowdStrike, where over 90% of their revenues were subscription software based with high margins, here you see more of a quilt for a product mix, if you will. So again, they started life as a hardware company selling firewalls with lower margins and also a lower valuation. So it's more evenly split here between the amount of revenue from security business, from technical support, which is also high margin and recurring in nature, and the product business, which is, a lot less profitable. So that's interesting. It's the first business we've seen along that lines. But here, as you can see, it's a very stable and profitable and handsome business from a financial and a fundamental standpoint. They've been profitable from a GAAP net income standpoint for 11 straight quarters or 3 straight years, 17 out of the last 18 quarters. And what we really like to see with these businesses is that bullet point number 2. We really like to see consistent revenue growth. And a lot of these names that we have exposure to, Brian and Mark and I, Brian and our director of research meeting, we have a standing meeting every Monday after we do our weekend uploads with Jarvis to sort of talk about what we're seeing in the market and what we're seeing in our names. And when we take a look at some of the returns in some of these names that we've seen, and one of the things that really sticks out to us is we really like businesses where that revenue growth is really sticky and doesn't change very much. So even this year, which was a year of COVID, and for a lot of businesses, there was a lot of disruption. And a lot of these businesses, even that finished the year strong, it wasn't that way in the middle of the year. A lot of things were in doubt. Or a lot of these names that show up on our chosen list, or these names that show up in Mark's Left Brain Weekly, you'll notice that the sort of the path of appreciation was substantial, but there wasn't that much downside. And that's because of the revenues really didn't fall that much. And again, these aren't discretionary items, and you don't renew them every year. They auto renew. So from a business standpoint, they aren't very risky. They aren't that risky that way. And then finally, what we look for, again, for founder-led CEOs on slide number 50, Ken Z, and he's been around for 20 years. And it gives us great comfort when the founder is still there running the helm, particularly when they have a substantial amount of their net worth in the company's shares. And that's a huge advantage. Again, just like any other shares that we cover, these are not FDIC insured. They do involve a substantial chance for a risk of loss. You should check with your financial professionals before you invest. And now we'll turn it back to Freddie with our final poll question. Freddie?
All right. Thank you, Nolan. I hope everyone enjoyed the presentation so far. And I will launch the last poll question for the evening. Have you ever opened an unfamiliar email and clicked on an attachment? So pretty simple selection here. Yes, no, or only by accident. It looks like a lot of people have said no on here. I mean, 42% saying only by accident, where 54 never. And again, the one person, 4% no. And make that two people, because I've been guilty of opening those also. But again, that's a way that a lot of people that hack get into the system. And that's where companies that we highlighted today really help out a lot of companies and protect themselves, is through email hacks.
We're going to go to Mark, who's going to give us an update on how to find all of our Left Brain info.
Thanks, Nolan. Thank you, Freddie. You're looking on the screen right now. That's sort of the icon for our weekly podcast, the Left Brain Weekly. And if you look over in the right column, there's different spots where you can find it. You can find it on our homepage, leftbrainir.com. It's available on iTunes. Nolan showed me just this week when they posted on iTunes, he gets a pop-up on his phone right away. There's another URL where you can get it. The Left Brain Weekly. We send out our weekly email of updates. It's in there. Anne Marie in the office sends it out as part of her constant contact emails. So you'll get it that way. And then we also post it on Twitter. The one thing I'd mention about this weekly podcast, the last 2 weeks, we've done cybersecurity stocks. Last week, Nolan talked about Tenable, and then this week I talked about Zscaler. So you can get both of those on the any of these access points listed on the right. So just to wrap up, you can kind of see here, and this is a list of the securities we talked about today. At the bottom, there's a code for our chosen, and we're going to email you a link and that code. If you are new to Left Brain and you're not already a subscriber to our full service, we're going to email you this link so you can access the chosen. And what the chosen is, it's basically a monthly top ideas report. We create one for stocks and then one for bonds. If you already are a subscriber, you have access to it. Usually there's anywhere from 2 or 3 on each one of the chosen lists, sometimes 4 individual securities, and then we update that monthly. And it has a pretty good track record going for it so far. So that's something you guys can look at. Look for that email. If you're not already a member to Left Brain IR, we'll send you an email with that passcode. And then with that, I'm going to turn it back over to Nolan for a final wrap up.
Well, thank you everybody for joining us. Stay safe. We know that there's a lot happening right now, economically, in the market, politically. We think that there's a lot to be optimistic about, not only in the U.S. generally, but we think the security markets, we think that these are really interesting times to be active managers, looking at individual names. And when we look under the hood at the individual businesses that we own, the people that are running those businesses, the end markets that they operate, I don't know that we've ever been more optimistic than we are now. And we think, we're in a position over the next couple of years. Generally, I think the returns can surprise people. So stay tuned. We'll continue to highlight names that we think are winners, no matter what happens. The next time you hear from us will probably be this spring. We will be also rolling out the Fortune Maker series. We will be debuting what we call our Life Changers stocks. So Fortune Makers, we think, can go up 10 for 1, have the potential. Life changer stocks we highlight earlier in their life's existence. And we think the upside there are 50 for 1. And so 10,000 could turn into 500,000 if we're correct. Now, obviously, there's no guarantee, and securities do involve risk. And because they're smaller, less financially stable, all of them don't have earnings, and they're much less financially secure. So there's much more risk involved. But if you're right, the amount of money that can be made can be life-changing. So look for the note upcoming on that. That'll be the next series you hear from us. So hang in there, stay safe, and keep tuned for our notes.